You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow Podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is commercial real estate expert and founder of RealCap, Dan Genzel. Now, Dan has nearly 20 years of experience over a variety of commercial asset classes and has participated in more than $100 million worth of investment transactions. Dan's experience runs the gamut, including industrial properties, student housing, condo conversion projects, office properties, multifamily, and just about everything else in between. And so, guys, I'm excited to share the candid conversation that I had with Dan, where we discuss a litany of important and exciting topics. But before we get on to it, just have a few quick housekeeping items to cover. Like I mentioned last week, guys, it's live. It's alive. Our mobile home park investment fund, more specifically, our third mobile home park investment fund. For those that aren't aware, I've been investing in mobile home parks now for nearly a decade, okay? We've owned tons of properties in 13 different states, thousands of units. This is our core competency. This is what we do better than anybody else. If you'd like to learn more about what we've got going on and the opportunity of partnering together, you can go to our website, sunrisecapitalinvestors.com, where you can basically download our PPM and our offering memorandum and learn about this investment opportunity. Again, sunrisecapitalinvestors.com to learn more about investing with our team. Moving on here, guys, a few months back, we launched our partnership program called BringKevinADeal.com. This is where I will pay you as much as $200,000 for any mobile home park or parking lot deal that's referred to me that I end up purchasing. To learn more about this opportunity, to download my deal acquisition criteria guide, and to submit a potential deal, you can go to BringKevinADeal.com. Again, that's BringKevinADeal.com. Moving on here, if you love what we're doing here at the Real Estate Investing for Cashflow podcast, please, if you haven't done so already, leave a rating review on iTunes and also subscribe to the show. Subscribing will ensure that you get notified when a brand new episode comes out, and leaving a rating and review will help us attract awesome guests such as Dan to the show. And lastly, guys, before we get on to it, I want to remind you of the free 30-minute phone call I offer each and every week, where you can jump on the horn with me and we can chat about everything and anything regarding real estate investing. Whether you're brand new or a seasoned pro, doesn't really make a difference. This is a way for you and I to connect and for hopefully me to help you in your real estate investing journey. Again, go to kevinbupp.com to sign up. And all I ask is that you take a moment and write down some specific notes or questions that you'd like to chat about during our time together. So when you make that appointment, it gives you an opportunity to put some notes in the calendar appointment. Write exactly what you'd like to chat about during our 30 minutes together. That way, we can spend it as efficiently as possible. And now, guys, without further ado, I'd like to get on to the part of the show that you've been waiting for, which is our interview with Dan Genzel. So here we go. Alrighty, guys, it is my honor to introduce my guest for today's show, founder of RealCap, Dan Genzel. Dan, how you doing today?
I'm good, Kevin. How are you?
I'm doing fantastic. Pleasure to have you here, and appreciate you taking time out of your busy day to join us here on the show. And so very much looking forward to it. Dan, to give our listeners a sense of geography, where are you based out of today? Where are we calling you at?
I am talking to you from Wisconsin.
All righty, good deal. I can hear a little bit of that accent too, or is that just a general Midwestern, or is that just a Wisconsin?
This is Skosh.
Okay, yeah. Got it.
Yeah, I'm located about halfway between Milwaukee and Madison.
Okay, fantastic. Well, again, appreciate you coming on the show, and looking forward to having a conversation with you. And so what I'd like to do in the very beginning here is, for those folks that aren't familiar with you, that maybe haven't heard you talk before, don't know your background, take a few minutes. I'm going to pass the mic back to you and just tell us a little bit more about yourself, but more specifically, what you do prior to real estate, and then ultimately, how did you find your way into real estate?
Sounds good. So I have been a real estate investor and entrepreneur essentially my entire career. I started off in duplexes and four families coming straight out of college. It's actually an interesting story where my roommates and I had a duplex across the street from the university. And I had a good relationship with the property owner. And one day I hadn't seen him for a while. And I asked around and talked to his wife, and he had subsequently died. And she came to me. She was really distraught. And she said, "Hey, would you be interested in buying this property?" And I'm like, well, I had maybe $20 to my name, and that's just not going to happen. So I continued to follow up with her, and she came back to me one day and asked, well, would you be interested in buying the property if I was the bank? And I'm like, sure, absolutely. So I started to research more and more about buying some real estate, and I got really interested in it. And long story short, they were a very, very big landlord in the university, and I subsequently bought a few properties from them. And over time, I just discovered that I did not want to be a residential investor long term. So right about then, I started working for a commercial real estate broker, and they were probably the youngest, fastest growing company in town. And I started doing industrial brokerage. And one day I came to the conclusion I was making really, really good money as a broker, that the people across the table from me just weren't that much smarter than me. I was doing a lot of work putting these deals together, and this is taking away a transaction fee. So Kevin, really what I did is I took the blinders off, and a deal came across my desk one day. None of my go-to guys would take it down, and I put it together. Probably didn't follow all the rules that I should have, and raised some capital from people that I knew. Hand was literally shaking at the closing table. I remember it was like yesterday, and I've done over 30 of them since. So
okay. Fantastic.
I would say today that I'm predominantly a value-add commercial real estate investor.
Yeah, I love it. I love it. And so I want to talk a little bit more about that very first deal, not the, the residential deals, the fourplex you bought, or the, the subsequent, residential properties, but that first commercial deal. But before we get there, let's add some additional context here. So where do you predominantly own your real estate investments? Are they near where you live? Are there specific markets that you invest in?
Yeah, I believe that real estate's a pretty local business, especially value-add real estate. So I'm looking to buy properties that have problems that I can put the human and financial capital together to fix. Mm-hmm. And that's typically leasing, that's typically more hands-on management, you name it. So that really requires me to be pretty present with these properties. And then I would say, not all the time, but I typically 2 months, 3 years after I stabilize a property, I sell it to a different type of investor. And then I kind of rinse and repeat.
Got it.
Yep.
And so just to, add some clarity there. So everything you own's within just probably a few hour radius of where you're based?
Absolutely. I own property that's close to the Minnesota border from Wisconsin. I own property in Green Bay down to the border of Illinois and over to Madison. So.
Got it. And how would you say you find most of your deals nowadays? Is it mostly word of mouth, brokers, direct to owner marketing? Where most of them coming from?
I think it's a combination of, I can't tell you the last time I brought a property that's on market, to be honest, but I think it's a combination of just the relationships I've had over 20 plus years of being in the business and starting off as a broker. And then also just kind of word of mouth, my accountant knows a guy, my attorney knows a guy. And it just kind of, when you get to be known as a guy that gets deals done, opportunity oftentimes follows you. Yeah. So it's just those relationships in doing what you say you're going to do.
Yep. You mentioned you've done many different types of commercial real estate, a multitude. I forget which one. You actually excluded one. I can't remember what it was, but I know you said you'd done self-storage, medical office, retail office.
The only type of deal I haven't done is a hospitality deal. So
there we go. That's it. Hotels.
I've never done a hotel deal or an Airbnb or anything like that.
Probably a good thing nowadays, at least as we sit here today recording this on August 25th. So, and so what would you say out of all the different types of deals you've done, is there a particular asset class that kind of rises above the rest that you're more drawn to than others?
I think my favorite type of asset class is college located properties, whether they are college housing or retail development. So for example, on a property I own right now is literally across the street from the university. And I've owned that property since 2006. And that is such a good asset, long-term asset, that my kids are going to deal with that property, because once these tenants get into that university, and the university continues to get bigger and bigger, it's such a good long-term tenant that just builds good customers, whether they're students or faculty. And since the university is not going anywhere, it's a good property to own. So I would say college located properties.
Is that a residential housing unit?
Nope,
or
that's a shopping center, the one I was just talking about. Yeah. So I have the Jimmy John's, the Anytime Fitness, the Domino's, the Verizons,
Gotcha.
I've got the whole lineup. So if you want to be across from university, you don't have any choices besides my property.
Yeah. How is your retail assets, that one, particularly, or any of the others that you might own, how have they, weathered through this COVID storm?
I'll tell you what, I am surprised at how well they have done. And I was so fearful that, because they're not credit tenants, they're regional tenants and kind of mom and pop operators or franchisees. And I'll tell you what, I am proud to say that besides one tenant, they are doing very well. I had to be a little flexible in collecting some rent because some of them had to get the PPP loans and things like that, and some other SBA type of financing. But I can report to you now that besides for one tenant who is kind of working the system, if you know what I mean, they are on schedule with rent.
Yeah, I interviewed a large retail operator probably sometime last year, and they predominantly invest in neighborhood, non-credit type strip centers. That's what the majority of their portfolio is made up of. And they had a interesting a way that they defined their tenant versus a large national credit tenant, and it was that the neighborhood retail center, the local entrepreneur that owns that Jimmy John's franchise, and I don't know if that Jimmy John's franchise is owned by the corporate or local franchise or what have.
Yep.
But those individuals that more than likely that own those different businesses inside that local retail storefront have probably not only put their own blood, sweat, and tears, like a life's worth into it, but also their life savings into it. And so they will literally fight tooth and nail until death, for the most part, to not lose that business, because it's all they have to keep the roof over their head. Whereas with a credit, national tenant, if they have to close up a store, shutter one store out of 1,000 of them, it's not really as large of an impact, right? There's not many folks that are going to feel the major impact from that up in the corporate realm. And so I thought that was a very interesting perspective on neighborhood, local retail versus that of a large, credit tenant type strip center.
I could not agree with you more, because the local operators, the franchisees, when we were locked down and there was no indoor seating, they were out there on the curbs and the takeout, and they were working it, versus the tenant that is having the issues. They're strategically probably using this as an opportunity to shutter locations.
Yes, exactly.
I completely agree with you. And when I bought that property, I had Blockbuster Video in it. We all know.
Oh, nice. I just read the other day the very last one closed. I think it was somewhere in Oregon, and they did actually. It's a pretty funny story. So the owner of that location, because it was no longer corporate, but the owner of that location basically converted the showroom floor, put like a bed and a bunch of like nostalgic like decorations with still, and turned it into an Airbnb rental. And I think they they raffled off 2 weeks worth of individual nightly stays to 14 different people or something like that. And it looked pretty cool. I was like, that's a pretty neat idea to kind of go out with a bang.
Yeah. Well, I tell you what, another deal that I did just real quickly on with as far as university is I bought a 40-unit apartment building. Not across, but very close to a college. And I had determined that there was no condos available for this particular neighborhood and area around the university. So what I did is I bought that apartment building for about $50 a door. I think I put in about 15 or 20 on average per door. And then I turned around and sold them for $130,000 a unit. And I'll tell you what, every one of those units was bought by a student's parents. and just phenomenal investments because I kind of keep track of it, and they just go up 5-10% every time one of those things turns.
Yeah, so that's great. Was that the last couple of years that you did that conversion project, or was that prior to the last recession?
That was during this last period. Yeah, okay. So between the 2009 and this one.
That's fantastic.
Yeah.
So I want to back up a little bit and go back to that very first commercial deal, right? That's kind of the baseline that sets the foundation for where you're at today. And so what was that deal that came across your desk that you couldn't get any of your regular buyers to, to get an appetite for, that you took down yourself?
So it was a listing. It was probably $1.5 million sale leaseback industrial deal. And it was listed by our shop. And it was kind of a dirty, grungy industrial building in a very good industrial park, heavy power, lots of uses. And the tenant or the owner at that point needed to recapitalize his business and needed to completely develop a new set of machinery. And so what he wanted to do was sell his real estate. They had some equity in and do a 15-year lease back. So not credit tenant, kind of a dirty industrial building. I couldn't get any of my guys to get really, really interested in it because it just didn't show well. But I knew, because I was industrial real estate, I knew this was a good property long term. So I essentially toured the property, couldn't get any of my guys to take it down. So I said, well, would you invest with me in it? And I got a lot more yeses than nos. So I went ahead and structured the lease, did all the credit checks and the financials, got the bank financing, put the investors together, and bought the property. And it was back in that time period, it was probably like a 12 cap, Kevin.
Nice.
And and then we owned it for a number of years, and the rent caught up, and it was just a pretty fat deal that we ended up selling then to a industrial REIT. So
can't tell you the last time I saw a real 12 cap come across my desk.
I know. Can you believe it?
Yeah. And any
but when I got
type.
the business, interest rates were 8% though.
Yeah. So there you go. So I mean, 400 basis point spread. So that surely still exists today.
Sure.
If you dig hard enough, you can still find good opportunities like that.
Yeah. So, but I was so excited. My hand was shaking at closing, not because I was nervous. I didn't know what I was doing, but I'm like, I just cracked the code on how to build wealth. So, and I could repeat this process over and over.
Yeah. You still own that building today, or no? You said you sold it to a REIT, correct?
Yep. Okay. Sold it to a REIT. I mean, it got to the point where the rent was so high, and it was such a fat deal that whenever you got a 14 cap rate and you could probably sell it to a REIT for like an 8, that's a pretty good day. Take the money and run. Yep,
absolutely. Yeah. So I want to talk about the present time that we're in. Obviously, COVID's caused some chaos throughout the world, not just the country here. And every different market's feeling the pain a little bit differently, and it's in a different form, depending on their governor and just the immediate local impact that it's having as far as shutdowns are concerned and things of that nature. And so just like we talked about your one retail center, it's doing not fine, but it's weathering. I mean, as retail stands, it's weathering and doing really, really well given the circumstances. And so my question for you would be, which commercial, this is generally speaking, this doesn't necessarily have to be just in your neck of the woods where you invest, but generally speaking, which commercial real estate asset class do you feel will thrive over these next couple of years as we move on past the pandemic?
I think that industrial real estate right now is doing well. I think, big box industrial real estate, good distribution centers, cross-dock facilities, they're going to do well. Anything that's on major thoroughfares, transportation hubs are going to do well. High-rise office, not so good. Off-corner retail, probably not so good. But I think multifamily will continue to do well. Mobile homes will continue to do well. If I had all the money in the world, I'd buy up every mobile home park that I could. But I digress. But it's just, there's going to be a lot less, I think, occupied real estate for quite a while. So you got to buy smart properties.
Yeah. So, hospitality is the one that's obviously getting their clock clean more than anyone else, and will probably be the slowest to recover. I do think that office, traditional office space, most of those are 3, 5, 7, 10-year leases. And so I think that will be a delayed pain depending on the current tenant in place and what their long-term plans end up being with that space, the utilization of that space. Are they going to need it all? What have you? Will they renew the lease with the same amount of space, with less, what have you? And so I think that will be a delayed reaction, right? That's going to take some time to play out. But hospitality, it's real, it's now, and they're getting their butt kicked. I know that you said you never bought into hospitality. However, I think we could probably both agree that there surely will probably be some prime located hospitality assets that come available, in the next couple of years that probably fairly, below market pricing. Is that something you would consider at that point, being that you're a value add investor? Absolutely.
This is not going to last forever, and not to get into a political discussion, but I think this is, to a large extent, overblown in many parts of this country. Mm-hmm. So it's location, right? So you're going to want to be really careful where you're going to be buying those hospitality assets. But I think they're all being unfairly treated, and all are taking a current beating. And I don't think that's going to be forever. And I think there's opportunity there.
Have you ever looked into doing a hotel or motel into multifamily conversion?
I have not, but however, with a partner right now, I am looking at buying a multifamily property at a good old-fashioned 6 cap and turning that property into an Airbnb.
Interesting. Okay.
Yeah, so we're taking the units and we're going to empty it out and turn it into an Airbnb and pretty much double that cap rate.
And how large is that building, and what is it that makes it such an attractive location to do short-term versus long-term?
Yeah, it's in Phoenix, and he is a Airbnb operator with respect to houses. So he has all of the experience and the infrastructure. And we were talking one day, and he is not the only guy doing Airbnbs in Phoenix. So I said, well, have you ever considered buying an apartment building and essentially turning an entire 15, 20 unit apartment building into Airbnb? Because you got the amenities, you got the pool, the cooking area, all that kind of stuff. He's like, that's a great idea. And I said, you can turn one of those 5 cap apartment buildings, and just because you're getting more rent per day or per week, it's a pretty fat deal. It's going to pencil out to be a pretty fat deal.
What's the exit for something like that? I mean, I don't think there's a real market per se, as far as who the end buyer might be if you were to turn it into that and then look to exit out of it.
Yeah, we would sell that as a package Airbnb property, and he is established enough where he knows guys that would buy that, and then he would continue to manage it.
Got it.
So, or worst case scenario, you re-underwrite it back to an apartment building.
Got it. No, fair enough. That sounds very interesting. And how large is that, just for some additional context there?
That is a 20-unit deal.
Okay.
Yep.
Okay, yep. Good deal. So prove the concept there, and then potentially go larger.
Yeah, a couple $1 million, and then we're going to probably put another $500,000 into it.
Okay. So, everyone in real estate in general, not just commercial real estate, everyone always talks about all the, the best deals they've done, right? Like the sweetest heart deals, the 12 caps of the world, what have you. But we've all, not necessarily that we've lost money, but we've all had our fair share of deals that just really didn't go exactly as planned, right? I think you've been doing this long enough. I've been doing it long enough that we probably got more than one that didn't really go exactly as planned and created more headache and stress than originally anticipated. And so would you mind sharing one of those deals, or that one deal that comes to mind with our listener base, and what happened, what went wrong? Given the chance, what would you have done differently the second time around?
Absolutely. So I bought 125 acres just between the Wisconsin and Illinois border. And this was in 2006. And I got a pretty good price on it. I think I bought it for about $9,000 an acre, and it was zoned single family, and that was the building boom. And it was a cabbage farm at the time. And I had spent probably another couple $100,000 in platting it into 125 lots. And the regime changed with the town leadership, and the person that came in after the fact was anti-development. So I continued to battle for a while, and 2008 happened. So I had basically all of the lots sold in packages to builders. So I just divided up to 125 lots with 6 different builders and said, you can have these lots. So I had those offers signed, ready to go, but I didn't get my final plat done because the administration became anti-development. So 2008 hit, and we all know what happened there. I ended up deeding over the land to the bank.
Oh, it's unfortunate. So yeah, but it happens. I mean, it's the risk of this business. And I think that, again, not sure what the future holds here, but I think that there surely is, there's risk associated with the next, 12 to 18 to 24 months. And I just don't think we know what that is yet, because the barometer is not a true indication of where we're at in this thing, because we've been pumping so much money back into the system that stock market's still reaching all-time highs. And it just feels like we're living in a kind of a phony world right now.
Exactly. But I'll tell you what, Kevin, I'll tell your listeners, man, that was such a good learning opportunity.
I'm sure.
And it taught me to stay in my lane. So I was a really good value add commercial real estate investor, getting in the residential land development, not so much.
Well, let's talk about that for a second, about staying in your lane, because one could argue that your lane is still pretty wide, right? Because you've done a lot of different types of deals. You've done a multifamily to condo conversion. You've done retail. You've done office. You've done medical office, self-storage.
Nothing that speculative though.
Airbnb.
Speculative to me. Yeah,
no,
exactly.
fair enough. No, it's one of those things I kind of preach. When someone's just getting started, I'm like, you got to pick one thing and kind of focus initially. Once
Absolutely.
you kind of get your bearings and not necessarily master it, but gain some confidence and do a couple of deals, prove your concept, whatever it is, then you might be able to kind of expand your horizons a little bit, look at other asset classes, other types of opportunities. But at some point, you got to just pick one and run after it full speed ahead.
Exactly. So, and I strayed from that. So I learned the hard way.
So is that a development now? Did it ever come back to fruition after the recovery?
You know what? I have not heard that it's been developed yet. So I was there probably 18 months ago, and as of then, nothing was going on.
Got it. Yeah. So is there anything in your business that you're doing today, you and your team, to prepare for potential opportunities that might be coming down the pike? Like, is there anything that's changed in your business over these last couple of months to, kind of, build up kind of a military, say, so that you can pounce on opportunities that might come about from this pandemic?
Yep. Big picture, raising capital.
Okay.
So right now we are putting together our value add, what I call credibility kit, and just the track record of the value add commercial real estate deals we've done. And then essentially, when the time is right, we're going to start having conversations with a lot of investors. But on a micro level right now, an interesting deal is I want to go out and buy an office building that's going to be a kind of a WeWork type situation or a Regus office center, because I think people are going to be stuck at home for a while, but they're also going to need small offices, or companies are going to want small offices, flexible, that they can come to work at without any really, really large commitments to a footprint. So I'm in the process of looking for the right, well-located office building that I can do that type of deal, because in my first office building that I ever built, I did that in 1/4 of the office, and that is the highest rent I've ever received in a property, and it just wasn't that much work. Mm-hmm. So I will relocate the office that I'm sitting in right now there and just kind of actively manage that on a flexible basis.
Do you have your eyes on any particular buildings?
Again, I still think we're catching a falling knife right now. So I think there's more pain to come. And I think the underwriting is constantly changing. It's probably something you're experiencing too. So I'm waiting for the dust to settle a little bit. But I would say on a weekly basis, I'm at least evaluating a couple different buildings. Haven't found the right one yet.
Do you go as far as actually diving in and finding out what type of debt is on, specific properties? I mean, we know that there's massive defaults happening in CMBS space right now, and that's probably going to continue coming for some time. Is that something you track?
I'll tell you what, Kevin, I've tried to buy notes on a couple different times, and it has been just an exercise in futility. So I do like to understand what is owed on the property, and I can kind of figure out what the principal balance is. But I think my time is better suited getting to understand who the real opportunity providers are, whether it's brokers saying, yeah, this guy's in trouble, or this building is going to be coming available, or driving down the road and seeing what parking lots are just completely empty and being like, that's a good building. And sometimes you'll see a for rent sign on the building and start dialing for dollars.
Yeah. Good deal. Good deal. Well, Dan, I'd love to enter what I call the lightning round. This is where I'm going to ask you 6 questions. Looking for 6 short answers. The first one being your biggest fear. What is it?
Not having enough in retirement.
Okay. How about one biggest regret?
I think my one biggest regret was I ended up not buying my first office building that I could have got into with 100% financing.
Okay. Most influential business book that you've read?
Think and Grow Rich.
It's a good one. Classic.
Yeah.
How about outside the daily work grind? What do you do to decompress?
What I do to decompress is watch my kids play sports. Okay. I love it.
Good deal. Yeah, me too.
Thank God it's coming back. I've been very worried.
Not everywhere. Not yet.
Not everywhere. Yeah.
I think you and I happen to be in different parts of the country where things are getting back to normal a little bit quicker than others. But which I'm very blessed for.
Yeah, my son's a football player, and he's got quite a future. So I'm looking forward.
That's awesome. How about the one thing that you can't live without?
My family. I can't live without them.
How about if one day you woke up and decided that you no longer want to be in real estate? Where would you divert your time, energy, and focus to?
I think if I had all the money in the world and I was financially free and I wanted to hang it up, I would become a race car driver.
Wow.
I would want to go on those amateur tracks. I love it. I want to go race cars.
I'm assuming that you grew up in a family maybe that...
My dad did. Yep, okay. My dad did. So he was very, very dirt track kind of guy, but I just have never had the time. My wife's been nervous about that with obviously the kids. So when I have the ability, I want to figure it out.
What do they call those? Is that sprint cars? Is that what they are?
It's the sprint cars. It's the dirt tracks, the asphalt tracks. Even in going on the Bajas, I'd love to explore it all.
Yeah, that's awesome. That's a first, man. I appreciate that. Yeah. Well, fantastic, Dan. This has been a lot of fun. And, what I'd love to ask you, you've shared a lot of gold nuggets already. Lots of great information is, if you had just one final gold nugget of advice or wisdom that you could leave with our listeners here today that might inspire and motivate them as they progress in their own real estate investing career, what would that one last golden nugget be?
I would say, and I tell this to a lot of people, there is no better business than commercial real estate, where you can compel a group of strangers or tenants in your apartment building or tenants in your mobile home park, for example, and bring them together under written leases to, in effect, pay your monthly operating expenses, including amortizing mortgage via the rent, and then essentially hand over to you what's left over at the end of the month. Mm-hmm. And then these very same tenants in about 20 years will have paid off your property. Yeah. There is no better business.
It's a beautiful thing, my friend. It surely is. It is. And so I didn't ask you, what is the long-term game? I know that sounds like, you're a value-added investor. And once you get a lot of these properties stabilized, you might ultimately sell them off. But I mean, what is that the long-term game, or are you kind of building up your own war chest of free and clear properties?
I am building up a war chest to be able to have my kids get into the business. They've indicated some initial interest. I've had them involved in real estate in different ways for a number of years, picking up garbage and, playing nice with tenants and doing lots of other things. So they have an interest in it, and I can't wait to see what that will look like.
That's awesome. Good deal. My kids are only 3 and 6, but I hope when that day comes, we can have that conversation and actually realize what it is I do, because they have no clue at this point in time, right? They just know that Dad, the 6-year-old Jackson knows I own trailer parks, but he doesn't even, I mean, there's no real comprehension of what that truly entails.
They are old enough to pick up garbage.
Yeah, exactly. Well, Dan, this has been a lot of fun. I really appreciate you coming to the show. And for listeners that want to learn more about you and what you got going on, what's the best place to find you?
Go to my website, multiplycapital.com, and there is lots of education on there on how to, evaluate real estate deals, what to look for, case studies, that kind of stuff. And you can kind of follow a little bit of what I've done, and be open to having a deeper conversation with anybody.
All righty. Fantastic. Dan, that's all we have, my friend. Thanks again for joining us.
You're welcome, Kevin. Thank you.
Alrighty, guys, that's all we have for today. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. You guys take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.